Over the past few months, the price of gold has made a historic jump, climbing above $5,000 per ounce for the first time ever. This has left many people asking, what caused this surge, and can gold stay this high? One of the main reasons behind gold's rapid rise is momentum. When an asset starts performing well, traders quickly take notice. As prices keep hitting new record levels, media coverage increases and more people rush in, afraid of missing out. This fear of missing out, or FOMO, creates a powerful cycle. More buyers push prices higher, and higher prices attract even more buyers. We've seen this pattern before, with stocks, cryptocurrencies, and commodities. And now, we're seeing it again with gold. Since 2025, gold has been rising steadily, month after month. History suggests that when gold enters a strong upward trend, it often continues for a long time. That makes momentum one of the key forces keeping gold prices elevated. Another important factor is diversification. Large investors and institutions have started reducing their heavy reliance on stocks, especially technology shares that have surged to extreme valuations. Companies like Nvidia, Tesla, and Amazon now dominate major stock indexes, and many analysts believe this kind of growth cannot last forever. Memories of the dot-com bubble in 2000 have made investors cautious. To reduce risk, they are spreading their money across different assets, and gold has become one of the top choices. Some are buying physical gold, while others are investing through gold-backed ETFs. Either way, demand rises and prices follow. A deeper reason behind gold's rally is the weakening US dollar. Because gold is priced in dollars, a weaker dollar makes gold cheaper for buyers using other currencies. That encourages more international demand and pushes prices higher. Since late 2022, the dollar has faced steady pressure from economic and political uncertainty. Concerns about central bank policy and long-term currency stability have made investors turn toward gold as a neutral store of value. This connects directly to gold's reputation as a safe haven. The world today feels increasingly unstable, with rising geopolitical tensions, ongoing conflicts, and economic stress in many regions. In uncertain times, investors look for assets that can preserve value. For thousands of years, gold has played that role, surviving wars, financial crises, and major political shifts. As trust in currencies and stock markets weakens, gold becomes more attractive. Inflation is another major driver. Inflation reduces the purchasing power of money over time. After the pandemic, inflation surged globally in 2021 and 2022. Although it has cooled somewhat, everyday costs remain high, and many people still worry about the long-term value of their savings. Gold is widely seen as a hedge against inflation, helping investors protect their wealth when paper money loses strength. Interest rates also play a crucial role. Gold does not pay interest, unlike bonds or savings accounts. When interest rates are high, investors prefer assets that offer guaranteed returns. But as rates begin to fall, bonds and cash become less attractive, and gold gains appeal. Markets now expect further rate cuts in the coming years, which could make gold even more competitive compared to traditional fixed-income investments. According to some analysts, even a very small increase in investment flows into gold-backed ETFs can lead to a significant rise in gold prices. Similar trends have also been seen in other precious metals, such as silver, which has surged alongside gold. Perhaps the most powerful force behind gold's recent rise is the role of central banks. In recent years, central banks in countries like China, India, Brazil, and Poland have been buying large quantities of gold. Their goal is to diversify their reserves and reduce dependence on the US dollar. Since around 2010, central banks have shifted from being net sellers of gold to net buyers, and their purchases have accelerated since 2022. Because these institutions operate on a massive scale, their buying activity has a major impact on global gold prices. For all of these reasons, many experts believe gold could remain strong well into 2026 and beyond. Ongoing political uncertainty, high demand, and expectations of lower interest rates all continue to support higher prices. Which leads to the final question: how much higher can gold really go from here?